This is how you use the equity in your parents' property to help you buy your first home faster. So save this so that you can show them. Obviously, if you are the parent and you're watching this, and this is the same thing to help your kids into their first home. Okay, so this is the parents. They bought a house for $2 back in the day. It's now worth $1 million, and they've got almost $1 million worth of equity. You can see that they're a bit older. And then over here is you guys. You want to buy for $1 million. You've only got 5% deposit, which is $50,000, and you want 20%, or maybe you just want 10% because that's like the minimum that you want to aim for. So you want some of the equity from this property to go here. So it's either going to be 100K or 150K. So how does that work? Well, these guys need to go to the bank and they're actually going to get a small mortgage against their property on your behalf. So they are getting out debt for you, which is why a lot of people do not want to do this, even if they can. And let me say that again, even if they can comes down to income, because if these guys are older, they haven't or aren't working and they don't have much income, they may not be able to service $100,000 or $150,000 worth of equity release to help you. But if they can, then cool, you'll get your mortgage for 80% of that value, they'll have their mortgage, and then you'll have your cash that you put in as well, and then it will equal $1 million purchase price. But the biggest thing with all of this is, do they have the income to get the money out? Do they realize that it's actually a loan? And do you have the income to service the rest of that mortgage? Alternatively, you could use a guarantor. So use this property as the guarantor, which I'll do in another video. Or in the perfect world, if these guys have got cash, they can give it to you as a gift, they can give it to you as a loan, and that might work better for everybody.